Hello and welcome back, everyone. I hope all of you are doing very well today. Thank you so much for joining me. If you haven't already, go ahead and subscribe to World Affairs in Context on Substack and Patreon for extra content and join our community. I would love to see you on my alternative social media platforms. They're linked below. Now, let's get to the topic of this video. The IMF's managing director, Kristalina Georgieva, just issued a new warning. She said uncertainty is the new normal. Immense political pressure on the Federal Reserve, which undermines its credibility, could result in a sharp repricing of the US dollar. Now, in addition to that, the Bank of England's Financial Policy Committee warned that the risk of a sharp market correction has increased. And that's not even all. Days after those two warnings, Donald Trump struck again, and this time with a fresh set of tariffs on China, 100% levies on Chinese goods after Beijing restricted exports of rare earth minerals. And of course, as we know very well, a restriction that has a direct impact on Washington's ability to wage wars. And I explained how that works in a recent video. You're welcome to watch it next. The timing of these announcements couldn't have been more dramatic. Just as the world's finance ministers and central bankers prepared to gather in Washington for the IMF and World Bank's annual meetings, Trump's announcement has reignited fears of escalations in the global trade war. In fact, Adam Posen of the Peterson Institute just shared a very interesting and quite shocking revelation that many of us have already been discussing for months. The Peterson Institute believes we're witnessing the rise of a new economic geography, one where trade routes increasingly bypass the United States of America altogether. Yeah, we didn't expect that, but that is the reaction of the global majority to extreme protectionism. The latest data from the United Nations Conference on Trade and Development backs that up. Global trade actually expanded by more than $500 billion in the first half of 2025. Developing countries, not advanced economies, are driving that momentum. Very, very important trend. Now, a big part of this shift is increased fragmentation along geopolitical lines, which in practice means trading and doing business with trusted allies instead of rivals. That's now becoming the defining feature of a more polarized global economy. And while the United States has so far avoided the worst economic fallout from Trump's tariff offensive, the real impact may just be lagging behind. Kristalina Georgieva issued a quite pointed warning. She said global resilience has not yet been fully tested, and there are worrying signs that the test may come. The test could come from multiple directions. There are so many issues right now. Tariffs are only one of many weapons in the available economic arsenal. If we add to it pressuring the Federal Reserve and undermining the very institutions that once gave U.S. policy its credibility, we see a range of factors that erode the trust that investors place in U.S. Treasuries. U.S. Treasuries, as we know very well, are effectively the benchmark that underpins global finance. And once the credibility is lost, it is incredibly difficult, incredibly hard to regain it back. It may not be even possible to regain it back. So why haven't markets reacted more violently to those announcements, to those warnings? Well, the answer lies in another unpredictable force, in artificial intelligence. The ongoing AI boom has been masking deeper weaknesses in the US economy. Massive investments in data centers and chips and in infrastructure have kept capital spending very, very strong, even as other sectors decline. According to the World Trade Organization, 1/5 of all global trade growth this year actually came from AI-related goods, such as semiconductors, servers, telecom equipment. Much of it is flowing from Asia to the United States. The boom has given markets effectively an adrenaline rush, but it is becoming clear that the AI surge may be hiding fragility elsewhere. And the warnings are growing louder by the day. The Bank of England recently cautioned that if the AI hype fades, markets could face a sudden correction. Technology stocks, especially those that are tied to generative AI, now trade at valuations not seen since the dot-com bubble. The Bank of England is warning here the AI bubble may soon burst. The Guardian reports continued hype and optimism about the potential for AI technology has led to a rise in valuations in recent months, with companies such as OpenAI now worth $500 billion compared to $157 billion just last October. The year-over-year growth is fantastic and is not sustainable, in other words. Another firm, Anthropic, has almost tripled its valuations, going from $60 billion in March to $170 billion last month in just, 6 months? Kristalina Georgieva herself echoed that concern, saying that today's exuberance mirrors the late 1990s. Valuations are heading toward the levels that we saw during the internet boom 25 years ago, she said, hinting at the risk of a sharp and painful crash. In a recent video that has now more than 300,000 views here on my channel, I explained why we are in a bubble and how we got here and what to expect moving forward. If you haven't watched that video, I highly recommend that you do. I will link it in the description below for you. An AI correction wouldn't just hit Silicon Valley, of course. It would likely ripple through the entire global financial system. Because despite years of talk about de-dollarization, the dollar remains the world's financial lifeblood. Now, don't get me wrong, de-dollarization is accelerating, and it has accelerated this year alone, but the United States dollar remains the dominant currency at this time. If US tech valuations crumble, the shockwaves would actually crash global finance. So in that sense, Trump's latest tariff threats are more than just another headline. They're part of a much bigger paradigm, one where geopolitics, markets, and technology are actually colliding in a very unpredictable way. As finance leaders fly into Washington this week, Georgieva's message couldn't be clearer. The era of common certainty is over. The world economy has managed to stay upright, sort of, through trade wars, through political chaos and a pandemic, but the next storm, whether it comes from tariffs, from tech, or trust in the rapidly deteriorating US financial system, could be the one that truly tests its strength. So what are your thoughts on the AI bubble? I would love to hear from you. Leave a comment below. Thank you so much for watching. I hope that you consider supporting my work. Become a subscriber here on YouTube, on Substack, and Patreon. I would love to see you on my other platforms. You'll find them linked below. Have a wonderful rest of your day. Take care.